Welcome, everyone. This discussion is brought to you by the team at ProTax Accountant, and we're tackling a really big topic for anyone self-employed in the UK, payments on account. Now, if your income jumps around from year to year, you absolutely need to understand how the system works, and more importantly, how you can actually take control of it. So let's get right into it.
All right, let's start with a question that might feel, well, a little too real for a lot of you. You've done your tax return, you see the bill for last year, and then bam, you see an even bigger number that's due, like, right now. It's a total shock to the system, isn't it? Well, that surprise, that shock, is almost always caused by something called payments on account. It can feel super confusing, but don't worry, we're going to break it down and make it totally clear. So what on earth are they?
Okay, in simple terms, just think of them as HMRC's way of making you pay your tax bill in two big installments during the year, instead of all in one go at the end. They're basically advance payments for the tax year you're in right now.
So is this for everyone?
Nope. There's a magic number. This whole system kicks into gear if your self-assessment tax bill for the previous year was over £1,000. That's the main trigger.
And how do they figure out how much you owe? Well, this is the key part. HMRC just looks at your tax bill from last year, and they set each of your two advance payments at exactly 50% of that total. You pay one in January and the other in July. Let's put some real numbers on this. Say hello to Siobhan, a graphic designer. Her tax bill for the year came to £6,000. But on deadline days, she didn't just owe that $6,000. She also had to pay her first payment on account for the next year, which was another £3,000. That's a £9,000 bill hitting her all at once. Ouch. And this brings us right to the heart of the issue. The entire system is built on one massive assumption, that your income this year is going to be the same as it was last year. For anyone whose income goes up and down, that is where the whole problem starts. And this is exactly how the system creates what we call the cash flow trap. And believe me, for freelancers and contractors, this is a very, very real and often painful situation.
To see just how bad this trap can be, let me tell you about Idris. He's a contractor, and he had an absolutely fantastic year. He landed some huge projects, and the money was rolling in.
So, after that amazing year, his tax bill was a pretty hefty £20,000. Because of that, HMRC automatically set his payments on account for the following year at £10,000 each. But as anyone who's self-employed knows all too well, a great year isn't always followed by another one. The next year, Idris lost a major client, and his income took a huge nosedive. His actual tax bill for this much leaner year was going to be way, way lower. So what's the problem? Well, HMRC had already taken payments based on his brilliant high-earning year. It turned out his actual tax bill was only £7,000, but he'd already paid them £20,000. That means HMRC was holding £13,000 of his money, cash he desperately needed to keep his business going. This is the cash flow trap. The system forces you to overpay during your lean years, which starves your business of cash right when you need it the most. You're basically giving HMRC an interest-free loan with money that you seriously can't afford to be without. Okay, so how do you get out of this trap? Well, here's the really good news. You are not powerless here. Far from it. Let's talk about the solution and how you can take back control. Your most powerful weapon is the ability to officially ask HMRC to reduce your payments. And the process is actually pretty straightforward. You just need to estimate your profit for the current year, log into your HMRC account, and use a form called the SA303 to submit your new lower estimate. It's really that simple. Now, this sounds amazing, right? And it is. But, and this is a really important but, what happens if you get your estimate wrong and you tell them a number that's too low? You see, it's a massive balancing act. On the one hand, you free up cash that your business really needs. But on the other hand, if you underestimate your income and end up underpaying, HMRC is going to charge you interest on the difference, and they can even hit you with penalties if they think you are careless. So how do you manage that risk? Simple, with smart planning. These strategies are your best friend. Honestly, the number one thing you can do is open a separate savings account just for your tax. Every single time an invoice gets paid, you move 20 to 25% straight into that account. That way, no matter what, the money is always there when you need it. Okay,
We have definitely covered a lot of ground. So let's just do a quick recap of the most important takeaways from all of this, the things you really need to remember.
First things first, and you have to burn this into your brain. Payments on account are always looking backward. They are based on old data from your last tax return, and they have absolutely no idea what you're actually earning right now. Second, and this is probably the most empowering thing to remember, you are not stuck with the number HMRC gives you. If you know for a fact your income is going to be lower, you have the right and the ability to reduce those payments.
And finally, number 3, proactive planning is everything. Be careful with your estimates. Maybe even add a little 10% buffer just to be safe. That tax savings account, it's your new best friend. And here's a pro tip. Filing your tax return early doesn't mean you have to pay early, but it does mean you get a refund much faster if you've overpaid.
So when you strip it all back, what is this really all about? It just boils down to this one simple, powerful idea. The goal here is to make sure your money stays with you, funding your business, funding your life, instead of just sitting in the taxman's bank account doing nothing for you.
We really hope this has cleared things up. Look, managing tax with a variable income can be tricky. So if you want expert help that's tailored exactly to your business, the team at Pro Tax Accountant is always there to help you navigate it. Thanks so much for joining us.